So, good morning, active traders, and welcome to this week's episode of Win with Ken. We're going to go over some live real money trades I just did yesterday, 11 no less, looking at some charts and the reasons why I put on the trades. And we're going to resume with our Trading Week Ahead broadcast in 15 minutes at the hour. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, agree to not make actual trades. I've done as much as 4.9 million in a single year. But apparently that's not impressive enough. A lot of traders in the survey said, okay, Ken, that was then, this is now. What have you done lately? What are your current trades? So let me share those with you. Before we jump into that, I wanted to give you a quick tip here. How to use coaching tips to improve your trading. Real trades, part one. The main idea is, of all the things I teach you, I want you to identify one specific measurable technique or an idea that you can do just 10 test trades with. Maybe you want to do 5 or 10 or 15. Do a handful of trades and be able to measure the success and the outcome of it. Okay? Here's an example of 11 real trades I did yesterday in the stock market sell-off. Mostly I was shorting the stock market by going long in the inverse ETFs like UVXY, SDS, QID, TZA, SPXS, TVIX, VXX. I like to trade in trend, and with the market going down, I like to go in instruments that go up when the stock market sells off. And also some outlier, high-risk instruments like the cannabis-related instruments like TLRY and IGC. And throw in a high-risk pharmaceutical ARWR for good measure. The tip is, I don't care if half of these stop out. I expect half of them may stop out. But look how small the initial dollar allocation is. Only 5, 10, 20 shares per position. Several $1,000s all told I put into the market yesterday. But instead of trading one stock, 1,000 shares or 500 shares, I trade 11 stocks with little tiny size. The ones that work out, I add to. The ones that don't work out, I keep real tight stops on. And that's an important difference between a professional approach as you start small. A moronic, stupid gambler's approach would be to say trade thousands of shares of penny stocks one at a time. You will blow up your account, and then you come to me after you realize you're not going to become the next penny stock millionaire. You're going to become the next penny stock broke-ass millionaire, broke-ass trader. So don't be that guy or that lady. Anyway, let's take a look at our charts right now. How to make the most of coaching and real money trades. Okay, here's the stock market. Crash and burn time, right? When it goes down, I like trading instruments like TZA that go up when the stock market crashes. That's what I do. When the market crashes, I'll go long the inverses. I don't just trade one. You may want to ask yourself, well, Ken, if they all go up, why not just pick one and be done with it? Well, to quote the late, great, or famous Maxwell Smart, missed it by that much. Oftentimes what'll happen if you just trade one instrument within a sector or an industry group is you will get stopped out, right? You get shaken out. If you diversify, you increase your odds that maybe a couple of the trades won't get shaken out and they'll stay alive during a continuation move on volatility breakout play. So charts like this, what a stock, right? TZA, it's an inverse, a bear ETF. It goes up when the stock market crashes. What else did I trade yesterday, and why the heck? TLRY, well, went from 90 to 300, back down to mean reversion pivot near 150. I bought a few shares. I'm not a nut. I'm not going to do 1,000 shares of a $100 stock that could go back down. But a few shares to get the party started. I will scale in if it starts to run because there's a lot of upside potential as high as I would say up to right under 200. So that's why I went long a few shares in this guy. SurveyMonkey is a flyer that's been going down. That's an ugly looking stock chart, right? Catch a falling knife. Dead cat bounce. Stop the madness, Calhoun. Okay, I bought a few shares. If it screws me and it goes down here, say to 13, that's going to be my maximum stop loss. So I'm not going to lose much if I'm wrong. If I'm right, I can add to my trade sequentially and build a position on the way back up. And that's how you make it as a trader. It's all about, as my colleague Van Tharp would call, position sizing and scaling. I'm in long UVXY. It had a reverse split, but nice big move lately. I went long SDS because of its sharp breakout yesterday. I went long QID. Same reason. See, if you look at the stock market and you say, I sense a disturbance in the force, something I've not seen since, who knows? Stop the madness. Don't try and buy bounces. Try and go short the market, at least I did, by buying these. Now, if the stock market does some surprise rally, which it may well do Monday or Tuesday, I'll take a little tiny stop loss in these and be done with it. No harm, no foul. Like I did in my Bed Bath & Beyond losing stock play. I bought at $14.80. I stopped out at $14.40. Cost me all of $20. Who gives a rip, right? Keep your stop losses as cheap as possible is the key to success in trading. It's all a numbers game. You throw your darts, you take your small hits for ones that don't work out, you build the trades, you scale into the ones that do work out. And that's it. Game over. You don't try and say, I'm going to master a secret pattern and trade thousands of shares of a penny stock and become a fortune, become a millionaire. No, Sparky, that's not how professional trading works. As my colleague Tom Sosnoff, who is my favorite guy to learn from on YouTube, he's the smartest guy in the world out there, from Tasty Trade, says, trade small, trade often. And as I also say similarly, trade wide, not deep. So this is kind of wide. And this is an example of live trades. Now IGC, ugly looking pop and drop play, but still, we may be getting near support. So put on a small trade. We'll see if it finds support and pivots, or if it continues to crash and burn. Either way, I play it safe. I've got complete confidence as an active trader, a real money trader, because I play small size on the front end. So I don't care if any one trade or any half of my trades don't work out, because it's not going to cost me much. You got to get that if you're going to make it as a trader. It's very much the math, not the chart patterns. The chart patterns are the price of admission. They're a scanning tool, primarily useful to identify not only the trend, but the volatility in the trading range, the trading potential in the instrument, right? This guy has a lot of range for an $8 stock or ETF. So from 8 to 970, almost a point and a half or so, pretty good. Something like TLRY has an insane range from 100 to 300. So there's something there for everybody. Step right up, get your trades, figure out how to make some money. TZA, uptrend, I went long. SPXS, uptrend, I went long. TVIX, uptrend, I went long. Now don't worry, if I buy near the top of the day or something, which I think I did, it's still in a technical uptrend, so it may keep running on up. I count on the market mechanic, the underlying mechanic from trades. Oh, thanks everybody, appreciate the kind words. That fear and greed are opposite ends of the spectrum. And as an old Wall Street saying says, markets take the elevator down when they crash and burn, boom. And just a stair step, slowly climbing the stairs of the escalator on the way up. So markets sell off. Fear is a much more powerful motivator than greed. So they're both strong, but speaking from experience, but fear is stronger than greed. So for that reason, when the markets drop, they tend to do so relatively sharply. I went long VXX. And I took a flyer on this guy, ARWR, because of the big range. It went from 20 all the way down to 14. That's admittedly risky. I'll take a stop if it loses 14. I'll play tight, right? So from a trade standpoint, one of the things you want to look for is keeping small stops, the way to make it as a trader. I saw either an email or a video from somebody that said, how do you tell a real money trader from people who aren't? The real money traders show you their stops as well. And let me show you one. I'll go over this in the main broadcast too, but I got stopped out in Bed Bath & Beyond. I take stops all the time. It's the price of doing business. It's like the light bill, the electricity, BFD. How many people know what BFD stands for? Look it up in the Urban Dictionary online at urbandictionary.com, I think. Anyway, big frickin' deal. I bought 1480. I got stopped out at 1430. The trick is I was only trading 20 shares to get light the match to get the party started. If it had gone up, I would have built the trade and bought it, say 1550, 1650. I might be up as much as 400 or 500 shares by the time all said and done. but it starts off with real small size. And this, my friends, is why. Because I want to keep the cost of being wrong as cheap as possible. And I'm sure your family members would probably agree with me. Do what he says. He knows what he's talking about. When you're wrong, it cost me all of $19, including the commish. It was a $10 stop loss with $10 worth of commish load. So I paid $300. I got back $281. So $19. It was a pivot swing, half a dollar stop on 20 shares. That is tight. That is as tight as you're going to get in the stock market, or close to, right? Those are the type of how to take stop wisely, as cheaply as possible. And if you go to my Trading Talk forum, you can see hundreds of examples of both winning trades and itty-bitty tiny stop losses like that. I took the shot, didn't work out, didn't cost me much. I didn't trade 1,000 shares and then I'm down $500. I learned the hard way, don't do that. Instead, trade instruments that have good, strong directional volatility on their moves up. So, any questions on that? Because I think it's something that can really make a difference to your own personal trades. And as you look for trade opportunities, a lot of successful trading. And as a guy who's done as much as 4.9 million in real money trades with tax return proof in a single year, I can tell you, you have to be patient. You have to trade strong stocks with really tight stops. And even then, you expect you're going to lose at least half the time. It's my 30% rule. How are you going to make money trading if you're only right 30% of the time? Which, by the way, you should kind of anticipate. Best case, you and I are going to be right 30% of the time. It's all about the math, the directional volatility, the allocation of resources in a way where, if I have 10 trades on, or in this case 11 trades, if half of them stop out, they're going to stop out so cheaply that the ones that do work out, and I would anticipate at least a couple of them will work out, I can build the trade and overcome the cost of the initial stop loss and do well. And that type of approach and more, this is just a quick sample taste of what you'll be learning in my Trade Mastery Success Formula. And I call it that because I really want to focus on success upcoming coaching program. A lot of traders register for this because it's only $4.95. You can go to trademasterycoaching.com and get to this, trademasterycoaching.com, or you can go to the trademastery.com main site and find the link for this. But anyway, I've got a preview webinar coming up this Thursday, the second of two. If you've already registered or you did the last one, you're good to go. If you have not yet posted a comment or question, do so, and you will be invited to the upcoming preview webinar where we'll go over the content of what we'll be doing in the upcoming coaching program. A lot of comments from traders around the world. So many comments. I really appreciate it. It means a lot to me because it makes this much more community-based trading approach rather than just me talking. I don't know about y'all, but I don't like just the guru off the mountain preaching stuff to the masses. I prefer a collaborative approach where it's you and me working together, which is what you'll get once you register for Trade Mastery Coaching. This is a good one. This one will be worth doing. It's only $4.95, which for somebody with my credentials is a very low ball price. I should be charging quite a bit more, but you get a half-hour coaching phone call with me. I do have a cell phone. We'll talk on the phone for half an hour where you can ask me questions and I'll tell you exactly how to fix the problems that you're running into as a trader based on years of experience. Or we could set up a go-to webinar. It's private, just you and me, and go over your charts and your most recent trades, whatever you want. It's your half hour. You get that included in the $4.95 price, which originally I wasn't going to offer because that's a very high value bonus. But you also get, now it's 6 1-hour coaching webinars that we're doing. Actually 7 because we're going to do a follow-up one in January. So you get 7 webinars with me. I'm Ken Calhoun, Trade Mastery, Day Trading University, trading tens of thousands of traders since the year 1999. So I hope that I can be of help to you guys, and that's a really good price for this. Deadline to enroll is 8 days. So you got a few days left, about a week left. And this is just, the starting concepts of techniques that we'll be going over. But anyway, does that help? I hope that it makes a difference. With that, my friends, let us get underway with today's main broadcast for our trading week ahead. Good to see you guys here. All right. Well, let's get the party started. So, welcome, active traders, to this week's broadcast of Trading Week Ahead. I'm Ken Calhoun, your host, coming at you live here on Saturday, October 6th. Looking at my calendar there, 2018. I hope that you guys are doing well. With the market sell-off, there's a lot of volatility in the cannabis stocks, in pharmaceuticals, in retail, in industrials. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, you agree to not make actual trades. Use a demo account. So, real trade example, I got stopped out in my Bed Bath & Beyond trade. It cost me all of 19 freaking dollars. BFD. That stands for big freaking deal. All right? Shut the front door. I bought at 14.80. I got stopped out at 14.30 on 20 shares. That's nothing. The commish costs more than my stop. So that's, if you ever do a parabolic trade, you get into something, it starts to go up, then it comes back down, get out as close to break even as you can, because that story usually ends badly if you hold on to it, because it can often keep dropping shockingly further against you. And if you've ever been in those kind of trades where you get an initial small breakout, I did this back with Snapchat back in the day. It went up like 3 points, and then it stalled and started to drop. I got out right near break even. And that's what you want to do when you're wrong as a trader. Use break even or close to break even stops as often as possible. And I'll teach you how to do that in the upcoming Trade Mastery coaching event. You guys talked. I listened. You want real trade examples? Here's 11 from yesterday. How's that? I mostly shorted the market with small size inverse ETFs. That's kind of the Reader's Digest version. And this is from my Fidelity account. And again, I don't care if half or even 2/3 of them stop out, as long as a couple of them more than make up for the cost of the stops and make me a net profitable trader on this rack of trades. This small ball approach, what I call pilot trades. You take your shots. You let the chips fall where they may, and you manage your money the right way. You learn exactly how to use that, what I call a smart pilot trading approach, in my upcoming coaching program. You can go to trademasterycoaching.com, and that will forward you to the correct location inside the Trade Mastery Empire site. I urge you to register now because the price goes up on Monday. So you've got today and tomorrow to register at the discounted early bird rate. And I never extend deadlines, as you know. For the last 18 years I've been in business, never once have I extended a deadline. And I'm not going to this time either, because I'm lowballing the price. It's worth a lot more anyway, so why extend a deadline? So trademasterycoaching.com. You have my word. I know how to do this. The main thing that's different is that you get personal attention from me with a half-hour phone call. You and I will get on the phone for half an hour at the end of the sessions, or later this year or early next year, whenever you want. You get a half hour with me on the phone. You get 6 webinars, 1 hour long each, starting in a couple weeks. Recordings of the webinars, PDFs, MP3 downloads, WMV video downloads, and much more, all for a lot less than I should be charging. So I do urge you to register your spot. Even if you're a long-time trader with me, I've got a lot of new techniques. And for example, I'm doing a bonus 6 session on the cannabis stocks, the pot stocks, and how to swing trade those as well. So anyway, let's get on with the Calhoun quote of the week from famous General George S. Patton. A pint of sweat saves a gallon of blood, meaning work a little bit on the front end and save yourself trouble on the back end. And that's what the coaching program is designed to do, is the pint of sweat, you work a little bit, like going to the gym and working out with me a little bit, saves a gallon of blood on the back end. So let's take a look at our stock market and picks for this week. Before we do that, our coaching tip of the week on trading momentum. Tip number 1 is wait to enter until a new group of buyers enter at increasing prices. That's why, for example, I was not trading the inverse ETFs much this past month or two, because they were kind of grinding sideways down. But all of a sudden, a new wave of buyers came in yesterday and Thursday. As the stock market dropped, the inverse ETFs started to rush upwards. That's a new group of institutional buying volume. So that's why I put on small. Still, though, I don't trust anything in the market, so I still put on itty-bitty baby trades, and like planting seeds in the garden and water them and see which of the seeds sprout and start to make me money. And that's the ones that I feed. I feed the winners, starve the losers. Just a reminder, I got 30-day trials at my services for just $7 now. Okay, well, let's get on with it. If we take a look at our 90-day S&P broad market chart, you can see we closed above the 50 SMA. So that's still not a good sell signal. I kind of jumped the gun. A better sell signal would be if we closed under the 2880 yesterday. But we're headed down and we have two large red candles. Okay, now oftentimes, looking at history, it's dropped about that same length of distance from a price projection standpoint before a recovery. So I'm jumping the gun just a bit. A better place to go short the market would be down under support. And my S1 trigger is 2858. That's my official S1 trigger. And I will start to scale in or build trades in the inverse ETFs if we get under that level. So 2858 is my official S1 level. My R1 level is 2918. And I'm playing it tight because, and the reason for that technically is I want to see a recovery of this base right there. So 2918, that's the first. Of course, we can wait for it to get way back up here, but you may have a long time to wait. So 2918 would be the first pivot point, swing low pivot point for a long play in the market, 2918. Better play might be most likely to continue on short if the market loses 2858. Okay. Now, from a sector standpoint, if we take a look at oil, I'm long USO, I'm long UCO, but I put in tight trailing stops because I sense a disturbance in the force. And I see a potential reversal. And I know from experience, remember my rule of nines that I published in Technical Analysis of Stocks and Commodities magazine, which I highly recommend you guys all register for and subscribe to because I have my Trading on Momentum column there every single month. And if you register there, you can get access to the back issues and all that kind of stuff. And over 36 articles I've written for them. I put a lot of work into them because I want to give you guys actionable intel that actually makes sense. And like I said, never buy a 9. And this is just another example of the validity of that approach. UCO, it ran into resistance with 39 and started to pull back down. A rebuy trigger would be over, not a trade recommendation, but I'll be looking to buy it if it breaks out over 40.5. Would be a new entry trigger for UCO. So oil still continues strong. Long term, I'm bullish oil. I think oil is like one of those manipulated price commodities that the powers that be over in the Middle East are in charge of, and they have tremendous knowledge of this. And when I start to see sustainable trend strength in oil, I buy. That's what I do. I'm a trader. USO, same chart pattern, different price. We'll see where it goes. Gold doesn't look interesting at all. It's starting to lift a little bit, but nothing strong. Usually there's an inverse relationship between gold and the stock market. So GDX is the one I've traded, the gold ETF I've traded for years. If we start to get over the mid-19s and especially over 20, that may signify a stronger reversal in the stock market. So gold is usually inversely correlated to the stock market. It's not really strong yet, so I'm going to be careful. Bed Bath & Beyond. That's the one I bought at 14.8 and sold at 14.4. No big whoop. BFD. It lost the 14 whole number support. I will be on the lookout for this, though, if it recovers and goes up. TVIX, like the other inverse ETFs I'd mentioned, are all moving up sharply on the stock market drop. And from a trend standpoint, I like this TZA chart the best. So it's a cheapie. It's under $10 a share, but it's got the best directional volatility pattern of all the inverses. So if you got to pick one, I like TZA if it breaks over 10. And we got an acceleration ramp, kind of a steady uptrend and then a sharper angle breakout on large volume, right? High volume breakouts with an acceleration move where it goes steady and then starts to sharply angle upwards makes for a good, sensible, professional trading approach. So I like to buy new highs. The place where I dance is the upper right side of the chart. That's where I've made the most money as a real money trader, is buying high, selling higher. So if I can buy wholesale at 10.20 and sell to somebody at 14, I'm a happy camper. Made my profit. Got my nut. That's what you do. Gotta hit them skins like a roughneck. Don't get street on them, kid. They won't know what you're talking about. ARWR, another one that started to sell off sharply. I put on a baby trade just in case this bounce holds. That's a admittedly risky, but I like the range from 20 resistance all the way down to 14. It may well keep dropping further, but if it bounces, I like the signs of bounces here. That's admittedly a risky play. TLRY also big runner up to 300 a share. Shooting star, collapse, bzz, boom, psh, wow, dead cat bounce, wow. A dead cat bounce, wow, with sound effects. Okay, well, it ran from 100 to 170 or so, pulled back down here to 140, 150. I like this little uptrend here. I will scale in if it breaks north of 160, and then again over 180, then again over 200. Kind of sense a disturbance in the force. Score one for Hufflepuff. He shoots, he scores. Psh, the crowd goes wild. How much money could you make in this guy? So those, my friends, are some of the trades for the week. Overall, the stock market's going down. So strategically, the big picture is look for potential longs in the inverse ETFs. Let's take a look at the daily candlestick chart so you can see. Look at that chart. You gotta love this. 20 to 300. Back down to 100. Mean reversion pivot. Wing. We want to see if there's a play up in here. I don't expect it to run up here, but if I can buy into and then sell right under 200, that would be a winning cycle of trades. It may keep dropping. I don't see compelling reason to go long in it yet. In the meantime, the inverses are starting to recover the 50 simple moving average line, like QID. This is an inverse ETF that goes up when the stock market crashes. One thing that I like, one of the favorite patterns that I've taught, and I mentioned this in one of my stocks and commodities articles, and you guys need to read those, is a sequence of convergence of price and volume with a 3-day cycle of volume going up and 3 days in a row of price action going up like that. We like that. We like that as traders. Small followed by large whole real body candle with increasing volume from 3 million up to yesterday's 8+ million shares. Somebody in Wall Street knows what they're doing, as do I. All right? So we got convergence with price action and volume going up. We want to go long in this if it breaks out over the nearest, in this case, 100 simple moving average line. That's the next institutional resistance level. I'm a former corporate statistician and quality engineer at the Ford Motor Company. I'm a numbers guy. I've traded millions. I'm one of the most widely copied and ripped off educators in the industry. One thing they can't copy, though, is my real money trades. You can go to tradingtalk.com and see over 130,000 page views of a lot of my real money trades from years ago. I'm now starting to redocument, and I'll start to update that site again with new trades in addition to these Saturday events. Let me ask, how many of you, show of hands, would like to see continued new trade examples? Because it came out as like the #1 thing and the most strongly rated thing in the survey. Is you guys want to see, more recent, like yesterday, real money trades I put on, and also the stops, the ones that don't go out, that don't work out, like the Bed Bath & Beyond. I'm very transparent. I'm very honest about these kind of things. So I like to show you the good, the bad, the ugly, the trades that work out, the ones that don't work out, and more importantly, how you can benefit from the knowledge gained from the lesson learned, right? That's what I try and do a lot of work. As a former corporate training and development consultant for a lot of Fortune 500s, I've got a lot of background in adult learning theory and interactive learning modalities and how to help things really stick when people learn. And that's why I'm proud to bring my Trade Mastery coaching program to you guys. It's a total stone cold bargain. That's why so many traders, I make it up on volume. There's no tricks, there's no back end. I'm not going to try and sell you something else. You get it all. You get it all for only $4.95, which is a real good bargain. And I promise there's no back end. At the end of this training, I'm not going to say, and by the way, if you want to buy this, it's only another. I don't do that. You get a half hour with me too, which makes that worth it just alone, right? You get 30 minutes. If I could save you just 1 or 2 stop losses or get you up to speed on how to fix your trades, going over your charts of your choice, of trades that you've actually made, if you want, we can go over charts together. I can help you say, well, I wouldn't have taken that trade because, did you see this? And you say, aha, you'll learn something that you can apply for your next trade, right? So if I can help save you stops and get you in on winning trades, That's a very tiny, teeny tiny investment. Plus you get, it's now up to 6, actually 7 now, 1-hour coaching webinars, plus a half hour with me, plus personal email support with me during the 6-week program, up to a couple emails a week. I don't want daily emails. I got too many of you guys to, otherwise I'd be spending my life in front of the computer typing out email answers. So, but keep it reasonable. I am here to support you. And then we've got a follow-up webinar to support you as well coming up in January. So do register for my event. It's the first one I've done in over 3 years. I don't do coaching events very often. I don't need to, frankly. I've got a lot of money. Thank you all for supporting me. But I do, because it came out in the survey, a lot of people wanted a low-cost coaching program. So I'm giving you low cost plus a half-hour phone call with me. Think, what questions will you ask me on our coaching phone call? Hey, Ken, I tried to trade, let's say, what's a good one? Let's say I tried to trade Pfizer on a breakout, or I tried to trade GE on a pivot, but I got stopped out. What could I have done differently? Or Ken, I'm in a winning trade. How would you manage it? What would be the tips that you would share with me? Or Ken, is this pattern one that's worth trading? Or Ken, I have a tough time scanning for winning trades. How do I make a difference in that? Whatever questions are on your mind, you can ask me in our half-hour call. So, and look at all the comments and questions and testimonials and all that good stuff from traders who've written in so far. I do appreciate it, guys. What else do I have for you? Let's see, that's it. So, no more pitch. What else? For Forex traders, weakness in the Swissy, right? The British pound to the Swiss franc is the strongest of the Forex chart. So if you do trade currencies, the dollar Swissy is also okay, but the pound sterling to the Swiss franc is the strongest momentum breakout currency chart right now. So weakness in the Swissy is the play of the week for you currency traders. I always like to do a little bit for our FX traders as well. We've got times of great volatility. Oh yeah, another pick to follow, almost forgot, is this one, SFIX. I've been following this for our traders in the live room, and we nailed the short calls on the way down. Boom, crash and burn. SFIX had been a $50 stock. Now it's a $26 stock, almost half as much. Maybe it crashes and burns and goes down to $5 a share. Maybe it recovers to 35. I don't know. I don't predict. I react. I'm a professional. That's what traders do. You put a box trading range, long and short, outside the current price action of strongly moving instruments, and you profit from either the pivot or the breakdown or the breakout, or the gap continuation in this case. Nice gap that continued. I always teach gap continuations because gaps usually continue, right? So do keep an eye on SFIX for potential short continuation south of 25 or long maybe over 30-ish. We'll keep an eye on SFIX. And if you're day trading it, we'll cover it in the live room as well. We'll go much tighter on those trigger points. IGC also on the potential bounce alert. I went long a few shares. Turns out at a bad price, but we'll see where it goes next week. It did a pop and drop. It may be finding support near the previous support and may be good for lift. So it's still abandon all hope. It's still a short pattern, but hey, it may bounce, so keep an eye on it. And I think that'll about do us, right? We got some really good charts to work with. And as you keep an eye on the biggest momentum runners, and you keep an eye on what type of trading approach makes sense for you personally, I urge you to be cautious in our current markets. Well, and thanks everybody. I got all these questions. The question, Jim, were there any winning trades yesterday in my list? They're all swing trades, so they're all live. There's no wins or no stops yet. I put on all those, they're swing trades, not day trades. Those are all swing trading breakouts yesterday. So we will see. Next Saturday, we'll take a look at how they worked out. Oh, thanks, Bob. Bob P. who's been with me for years. I recognize the name. Hey, thanks, Robert. Saying today was one of my best presentations. The secret coffee from a Bellagio coffee mug. Inside tip there. But sincerely, thank you very much. I really want to make a difference and start taking up taking my game to a whole new level for you guys. Not the same old things, always new strategies and new techniques designed to help you make bigger winning trades more often and hopefully help you turn the corner. Because this can be frustrating as hell, and it really pisses me off to lose money. Losing money sucks. How many of you are with me? Say aye if you agree with me. Channeling Tony here. Say aye. Preach, Ken. Losing money sucks. So the way to not lose money is to trade really itty bitty trades, feed the ones that work out, and scale out of the ones that don't work out. That's kind of it as a trader. You throw a lot of darts. Half the time or more, they ain't going to work out. I'm here to tell you. It's not about magic chart patterns that you trade thousands of shares with and become the next millionaire. No. It's about directional volatility, about trade management. You know, if you're, say, buying calls or selling puts against some of these guys too, if you're an options trader, make sure that you're not paying too much premium. Make sure you're looking at the spread. Make sure that you're not overpaying for your options, which is a big mistake a lot of options traders make. If, like me, you like to trade the underlying primarily, you want to trade directional volatility the right way. Hey, thanks, everyone. I got to run in just a minute. Where do I execute my trades from John? I've got accounts in Ameritrade, Fidelity, and Interactive Brokers. I like IB for day trades. I like Fidelity and my SEP IRA for swing trades, and Ameritrade for swing trades. Traders asking about Apple. I don't trade Apple. I'm sorry. It's too pricey. I did put on a trade yesterday, TLRY. That's over 100 a share. The last time I traded a stock up near that price was Netflix back when it was 100 a share, or under 100 a share. So, but I like stocks usually. I will trade the small ones under $10 a share if they have continuous strength. But most of my trades are $15 to $40 a share. That's kind of my sweet spot, 15 to 40 a share. I will on occasion trade $50 or $60 stocks, but not often. Usually I like $15, $20, $30 share stocks because I can trade more of them for a good capital allocation. Oh, thanks. The trader is saying everything you show is great to help us learn. Saying yes, real trades. Shannon saying, what was the net profit loss for 10.5? I didn't close any trades on 10.5. That was my entry. So I entered all the trades. Just to be clear, these are swing trades. Maybe I should make that clear. I'll type in the word swing trade examples, but these are all swing trades that I put on. These are all seeds that I'm planting. I may keep these positions open a couple weeks or a few days, depending on where price takes me. But these are all swing trades, not day trades. They're too small for day trades. You can't day trade 20 shares. You got to day trade at least a few hundred shares, up to 1,000. But swing trades are another story. You can start off with 20, 30, 40 shares and build the trade sequentially over time. Oh, thanks, traders. I appreciate it. And no, I'm not trading options in TLRY, but you're right. It is kind of pricey. That's why I traded itty bitty share size. So yeah, those are all swing trades. So when, hey, good morning, folks. Question from Dave, the guy who I like, Tom Sosnov. He's the CEO of. He co-founded Thinkorswim, and he's the CEO now of Tasty Trade, and he was a keynote speaker at the Money Show events, and he's brilliant. He's my #1 favorite guy to learn from on YouTube channels. A lot of people I like, but Sosnov is the smartest. He's a floor trader, former floor trader, and he's sharp. So I learn a lot personally from his videos. He talks. I did an interview with him on my worldstoptraders.com site, and like he said, professional traders don't rely as much on charts. We look at things like the numbers, directional volatility. It's the math, and that's what I try to teach you guys. The charts are there to illustrate, and they help you scan visually for charts with enough directional volatility and trading range to make it worthwhile for you. But ultimately, it's all a math exercise. Trading should not be exciting on the edge of your seat, clicking around, eagerly doing anything. It should be much more like doing your taxes. It should be unexciting. Successful professional trading is an activity in math and numbers. It's not an activity in chart patterns. Though the chart patterns are the precursor, the main make it or break it is where you exit your trades, not the chart patterns you use to enter your trades. Your success as a trader depends on your exits. That gates your profit and loss, friends, not the chart pattern that you use to enter, because we all know how that works out or doesn't. So I've learned a lot. I hope this helps. I got to run. I got swing scans coming up in 5 minutes. So welcome back, and I hope that you guys do well in your trades. This has been a TradeMastery.com presentation. I'm Ken Calhoun, your host. Sign up for the Trade Mastery coaching at TradeMasteryCoaching.com or go to TradeMastery.com. Register your spot. The discount price is over tomorrow at midnight. It will not be extended. It never is, for those of you who've been with me. You have my word. You know, you get personal access to me, which I never give before, but you get personal email support for 6 weeks, plus a personal phone call, and a lot more in store for you. And a follow-up webinar in January, too. So anyway, see you guys there. Take care. And have a great week ahead. I've got to go because I've got swing scans. I'll see you swing scans members coming up in just a few minutes.